How to legally never pay taxes again. In this episode, we're going to talk about rich people. Now that I am a rich person, I consider myself a rich person. I meet tons of rich people, millionaires, billionaires. I have learned so many secrets about taxes, business, loans, funding, and I'm going to share all of that with you today because we have people out here like Donald Trump saying that you are a fool if you pay taxes. Elon Musk doesn't pay any taxes. And I'm going to share with you the ways that normal people, regular people, can never pay taxes again legally. I'm going to share all of it with you today. Let's go.
Noelle. Yeah, she can fix that. You gotta get it done, all you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
So let's get right into it. You already know that rich people make money and keep money. That is why they are rich. So we're going to talk about how they do that because there are 5 easy ways that they are avoiding taxes legally. Again, tax avoidance, not tax evasion, because there are legal ways to do this. Before we get into this, only about 33% of you are actually subscribed to my channel watching this. Only about 33%. So that means most of you are not subscribed to this channel that are watching. So please take a moment, click that subscribe button. That actually helps me get a lot of great information from people. The bigger the channel is, the more people share information with me, and I'm able to share that with you. That helps me. That helps grow the channel. I really appreciate you doing that. Please click that subscribe button right now. All right, let's get back to this. So first of all, let me say I am not a lawyer, but I have lots of lawyers, and I'm definitely not an accountant, but I have a flock of them. So I'm going to give you these real ways, and I'm going to explain it to you, and I'm going to really take my time and break it down for you because it truly is the way to legally avoid taxes right here, right now, not always, things that are working right now that can work for you. So the first one. Stop earning money. That is the first thing that you got to do if you want to start to legally avoid taxing. This is the real big one. If you stay to the end, I'm going to share with you a really easy one for people to do. But this is the thing. If you do not earn money, then you do not have to pay taxes on your earnings. Most of the taxes that are paid are income taxes on your earning. However, if you own a business and the business makes $100,000 or $1 million and it spent $1 million in the business, well, then you didn't personally have any earnings. Even the business had it. So you do not have to pay taxes that your business earns. You have to pay taxes on what you earn. And so let me give you a quick example. Around the 3rd quarter of every year, my CPA, my accountant, he gives me a call and he tells me, hey, you're going to have a really big tax bill. In this case, it was like nearly $400,000 unless you actually spend money, okay, in the business on some different expenses. And so he actually tells me to start spending money in the 4th quarter. Again, October, November, December, that 4th quarter of the year, you will notice lots of different rich people spending money, buying cars, going to classes, conferences, buying coaching, spending on marketing and advertising. Like that's a really big one that's spent on in the last quarter. They'll just start pushing money into their marketing because that is an expense that is really a great write-off for businesses. So when you do this, you're actually reducing the amount of money by spending it in the business on things that will actually help the business. But otherwise, you would be sending that money to the IRS. So in other words, you can spend it on advertising, on marketing, going to classes, having an event, traveling, eating meals, meeting with clients. You could spend the money doing those things, or you could write a check to the IRS. Now, of course, most people are going to choose to spend it in their business instead of writing a check to the IRS. If you want to just donate money to the IRS, you know you can do that. Rich people, if they felt like it, could just go right to the IRS's website. There's this button right here. I'm going to show you a quick screenshot of it. And you could just donate money to the IRS if you so choose to do that. If you want to donate money to the U.S. Treasury, you could do that. I don't really think probably anyone takes advantage of that or does that because why would you? Most business owners, they will spend the money in their business. They will just spend instead of writing that check to the IRS because there's no real benefit to your business writing a check to the IRS, but there is a real big interest to your business if you spent it on a conference, a class, an event, a car, buy like a G-Wagon and things like that. That was very popular. Business owners buying G-Wagons because of the, Section 179. I'll get into that in just a second. But that's what you want to do. You just want to spend the money in the business so that you don't have any earnings and they don't come to you. And this is an easy way to avoid paying taxes because it's in the business and the money was spent in the business. Let me explain a little bit further so you really get this, because you can do this right now. You can easily start a business. Literally go to your Secretary of State's website, get an LLC, get in a corporation, get an EIN number, and now you have a business, even as a side hustle. And your CPA, your accountant, whoever does your taxes, you'll have a lot of deductions, especially that first year, the buying the license, any classes that you spend, any conferences, any meals, and you will now actually create a system where you actually have deductions, and you can actually even take, if you have a job and you get a W-2 and they're actually just taking the taxes out of your check, or if you have this business, now you actually can create losses and offset some of the taxes that you're paying from your W-2 job. So if you just have a W-2 job and you just have a job and this is all the income that you have, you are going to be paying the maximum amount of taxes. However, if you actually have a business, you're going to be probably paying the least amount. But if you have a job and a business or a side hustle, you could at least be reducing your tax liability almost to zero. I'm going to keep going because you can actually, what I tell you in the next one is really going to blow your mind. Number 2, use debt strategically. So when it comes to not paying taxes, you actually don't have to pay taxes on borrowed money. So if you've ever read Rich Dad, Poor Dad, if you've ever met Robert Kiyosaki, you already know this is what he's talking about. And there's people that say be debt free, Dave Ramsey and different things like that. But most actual rich people have tons of debt, and they do not have any idea about what you're talking about when you say live debt free. That is because they think that most people are inferior and cannot handle debt. They're actually kind of talking down to you when they say that you shouldn't have debt, because what they're saying is you can't handle debt. It'll be people that have tons of debt, millions, billions, people that own Viacom and these big companies telling you not to have debt because they don't think that you can handle it. But what they do is they have debt strategically. So let me give you an example of what I do and what tons of millionaires and billionaires have taught me to do. You don't sell your assets. Rich people have assets and they leverage their assets. For example, let's just say you have stocks, all right? You can have a stock that you bought at $100 and now it's worth $200. Well, if you sell that stock, you're going to have to pay taxes on the gain that you have. But if you actually just leverage, you borrowed against all of your stock portfolio and got that money cash, you would not have to pay any taxes on that. You don't pay taxes when you leverage your assets. When you borrow money against your assets, you do not pay taxes on that money. If, for example, you have a house and you get a home equity line of credit, a HELOC, and they give you $100,000, $200,000 cash, that is not taxable. You don't pay money on that tax. You've leveraged your assets. And this is what rich people do, especially Robert Kiyosaki, using that as an example.
So while some financial experts are saying get out of debt, I'm saying learn how to use debt.
He has lots of real estate, and instead of selling those assets, and I guess he does sell them off sometimes, he absolutely does. But of course, you have to keep them for a certain amount of years. You can do different exchanges. I'll talk about that in just a second. But more importantly, just leveraging them, doing cash out refinances. That's how he gets the cash out. That's how he pays his own mortgage. Because I know people are thinking, well, number one, you said don't earn any money, Noelle. So if you don't earn any money, well, how am I going to pay my mortgage? How am I going to pay my car note? Okay, because this is the question that Noelle had when a rich person told me this. And they said, you're going to leverage your assets. You're going to get these portfolio and you're going to leverage these assets. And that's the money that you're going to live off of, pay your bills. And this is not going to be taxable. It is amazing, and it is truly what most rich people do. I'm going to give you another example. Say, for example, Elon Musk, because I mentioned him earlier. Elon Musk actually was going to be faced with this huge bill because they gave this huge tax bill, because they gave him this large influx of stock options, okay? Because he doesn't take a salary. Most people in their businesses, they don't take a salary. We don't need to take a salary. We don't want to even pay the taxes. Or we take a small salary just to do a few things. But anyway, he had gotten all of these stocks. So instead of him actually just selling the stocks, let me show you, for example. Let's just say this here, okay? Let me pull out the whiteboard so you kind of understand this really, really well. Let's just say he has $100 million worth of stocks, okay? Let's just use that as an example. Well, he could sell them. And if he sells them, guess what? He has to pay taxes on them because that's now income because he sold them. But what if he just leveraged them? Like I said, just takes a loan out against them. So he has $100 million worth of stocks. Let's just say he gets a loan for $50 million. Let's just use round numbers here. We're going to keep it simple. Now he has $50 million cash in a line of credit or in a loan. Most likely a line of credit is what you could do if you have really good credit. Again, You may need to have decent credit in order to do some of these things that I'm saying. So if you have bad credit, you can easily get your credit fixed. There's a link in the description box to creativecreditsolutions.net. They actually helped me fix my personal credit report and get my credit score up. And I want you to do the same. If you have good personal credit, you will not have any worries leveraging money, okay, on your assets. But if you have terrible credit, you're actually going to be paying higher interest rates and doing some certain things. And maybe instead of them giving you, $80 million off of this 100 million, they may only give you 50 million because you have bad credit. Using round numbers here again. But if you have great credit, you'll get 80 million. So again, you want to have really good personal credit and start building business credit. Again, there's a link in the description box to 𝗧𝘅 𝗥𝗲𝗃 if you want to build business credit, because you can even borrow in your business's name. But let's get back to this example. He leverages it. He gets a loan or a line of credit for $50 million. That is not income. So in this case right here, he has to pay 20-30% taxes minimum over here. Over here with the loan or the line of credit, most likely, again, a line of credit, he pays 0 taxes because this is borrowed money. Now, over here, of course, he's going to be paying an interest rate. So, of course, this is a loan. So you'll have interest. So maybe the interest rate is 10%. Well, guess what? That's another write-off for the business. Okay, the interest that he is paying on a lot of these loans, especially if he gets the loan in the business's name. So there are so many easy ways to just leverage your assets so that you're never paying taxes on them. And you can do this really easily with real estate, which I'll get to in just a second, because most people don't realize how easy it is to do this. And that is very, very easy to do. You don't need perfect credit. You don't need to be rich to do this. You can start doing this now so that you can have more money to invest. All right, let me keep going. Number 3, maximize deductions. You can never pay taxes again legally by maximizing the deductions that already exist in the tax system. The tax code is designed for business owners, okay? Literally corporations. I feel like America, we learned this when I was getting my MBA in business school. It's like America was designed to be for businesses. It was like actually a corporation, you know what I mean? They literally made a charter where America was like this corporation. I still feel like that is the pulse of our culture. And so our banking system, our IRS system, our taxing system, all of it is designed to benefit business owners because we are the job creators. We are the economic engine. That is just what the foundational belief is in America and in capitalism. So if you understand this, you can really, really win with this. Don't fight against it. There are benefits in it for you. All you actually have to do is get a tax professional. Hire a tax professional. I'm literally going to put a link in the description box to an amazing tax person, okay? And he even does tax relief. So if you have issues with tax liens, he can help negotiate those and get rid of them. But you are missing out on lots of deductions, especially if you don't get a business. If you don't have a business now, again, start a business. Get that LLC, get that S Corp, that C Corp, whatever. Again, consult with a professional. There's a link in the description box to 𝗧𝘅 𝗥𝗲𝗃. They can help you set the business up. They can help you get business credit. And this will create tax deductions for you, because once you now have a business, all of the startup costs pretty much are tax deductible. Getting the licensing, paying for legal fees, and you will actually create things that you can write off. Let me give you a quick example. When it comes to earning money, okay, there is a poor way, in the way that people with a poverty mindset and a poor people, and again, I used to be a poor person, I understand this, and there's a rich mindset, and this is how they pay taxes, and this is how they're done. So on this side, I'm going to write poor, and on this side, I'm going to write rich. And this is the order in which they do things. Poor people, okay? The poor way to do things. You actually earn money, right? You earn money. Both sides earn money. No problem with that. But when it comes to the poor, they earn money, then they immediately pay taxes, right? So anybody that works a job, you earn money, they take the taxes, okay? You are paying taxes immediately. And then after you pay your taxes, then you get to spend money, right? Now you get to spend, you get to invest, you get to do whatever you want to. Well, guess what? It's the exact opposite with rich people. The only thing they start the same is earning money. But then the next thing they do is they actually spend, okay? Because the rich have a business. They have set up LLCs and different things like that. And so they get to spend because they are thinking they are like a business. So they earn the money, then they spend it in the business. They spend it on paying all the bills, paying the mortgages, paying rents, paying employees, paying payroll. They spend it. And then when it's all done, said and done, then they pay taxes. So what they're paying taxes on is so much less than a working person. So it's really just this contrast. Like, do you want to be on this side where you earn and immediately start paying taxes? Or would you be on the side where the rich, where you get to spend all of it and then whatever is left over, that's what you pay taxes on? And that is what I was saying earlier when we first started, how you're never really paying taxes because you make sure at the end of the year to spend. And if you haven't spent enough and you're going to have a tax bill, you then spend. You then go to classes, go to seminars, have an event, travel, go out on meals, meet clients and meet them for lunch. You just start spending and doing things in your business. And more importantly, too, you start spending money on advertising and marketing. And that really comes in handy because, of course, now you're just growing the business. So let me keep going. When it comes to being a rich person, now I get to write off things too that other people don't. So if you work a job and you have a cell phone, that's just your cell phone bill. You have a job, you drive a car, that's just your car. You don't get to write that off. You buy a laptop for your business. That's just a laptop that you bought if you have a job. Now, if you have a business, all of those things that I just named are all tax deductions. You get a phone, that's a tax write-off for your business. I need it for my phone, my laptop. I need a new laptop. I just got me a new laptop from Apple. That's a deduction for my business. If I go visit someone and travel and go meet a client or a student, all of that is tax deductible. My flight is tax deductible. My hotel is tax deductible. The meals that I ate when I went to Houston or Georgia or whatever state to meet someone, that is all tax deductible. If at the end of the year we actually have too much profit and my accountant is saying spend money, I'll do an event. I get to write off the hotel and where we had and all of these things, fly in different employees, write off all of what they spent, what it costs to bring them to me or for the event. All of that is tax deductions. So, and when it comes to owning a business, you actually have so many more tax deductions that you just don't have as a working person. And that is why working people, W-2 employees, pay the bulk of taxes in America, and why rich people like Donald Trump and Elon Musk are not paying any taxes at all. And even Noelle Randall paying just very, very little taxes. I'm like Warren Buffett. I do pay taxes, but I'm like Warren Buffett, where I know that there are employees. Like Warren Buffett said, my secretary actually pays more taxes percentage-wise than I do. And I actually can say the same thing. I have employees that I know pay a higher tax rate than I do because I am the business owner and I am able to write off everything plus. I'm even able to write off things that haven't even happened yet. And that's what I'm going to tell you next. Number 4, invest money. You have to invest money. If you want to not pay taxes, invest the money that you have. And that way you do not have to pay taxes. And it is a very, very simple formula. Let me explain. Okay, so let's go back and let's just say you are an employee and you earn, let's just live a round number. You work and you earn $40,000 per year. Okay, you earn 40K per year through your job. All right. And let's just say instead you invest and you made $40,000 in the stock market just by investing. Well, you're going to have 2 completely different tax scenarios. With this job situation, you already know you're going to pay taxes, and we're going to take that number probably down to like $32,000 per year. Okay. After you pay your Social Security taxes, you pay your federal taxes, you pay your state, county, depending on what state you live in, you have income tax there. So again, you earn $40,000 at a job. After taxes and everything, you're going to have $32,000. Well, guess what? If you actually earned $40,000 investing, you would actually have, after paying all of that taxes or whatever, you would actually still have $40,000. Okay, because you actually would not have to pay taxes on $40,000 worth of investment long-term gains. Okay, so again, let me explain this to you. So most of people, where they have a real problem with and why they really can't get rich, is they're just impatient. They want everything so fast. They don't want to work something. They don't want to let it build up. And I'm telling you, I used to be broke, bankrupt, and live in my parents' basement. Today, I am a multi-millionaire. It did not happen overnight, but I was able to start earning money in the first year, in the second year, in the third year. And by like the 5th or 6th year, I was a millionaire. Now I'm a multi-millionaire because I just kept going. Every day was not sunshine and strawberries, but I just kept going, and you can too. And if you just keep going with something, you will likely be successful. It's mostly from people just quitting and giving up because they got overwhelmed, trying something new as to why you can't be successful. But if you have a business, you have an idea, and you just work it and you stick to it, I assure you, I'm confident you will be successful. You can't help but be successful. Nothing can beat a committed person, okay? There's a saying that nothing beats a committed person. So if you're committed and you stick with it, you will be successful. And so when it comes to stocks, Most people like doing trading. They like to day trade. Oh, I want to put my money in and I want to get it right back. I even had like an aunt that was talking to me about like day trading. And I was like, you're not really making any money because you're going to have to actually pay taxes on any of the money you make because those are short-term gains. And you keep a stock and you hold it for more than a year. You actually you don't have to pay taxes to a certain amount. Okay. So you can earn hundreds of thousands of dollars. I actually give you the numbers for 2025. I'll put them up on the screen. I want to say the number. Hold on. I'm going to look this up. The number is like freaking $300,000 or something. Hold on, let me tell you what it is for 2025. The tax rate on long-term capital gains, okay, for a single person is $48,350 right now. You would have to pay zero taxes on anything less than $48,350. That's 2025 numbers. You pay a 15% tax rate from $48,351 to $533,400. So most people are probably going to be there, and then it's 20% over $533,400. Okay, but guess what? It's zero for up to $96,700 for a married person. Okay, filing jointly. And then it's back to $48,350 if you're married and you file separately. So again, single filers, whether married or not married, $48,350 you can earn from your long-term gains from your stocks and pay 0% taxes. No taxes would be paid. But if you earn $48,000 at a job, you are paying taxes. You are. So let's think about this for a second. And if you're married, it's $96,700. Okay. So these are the numbers. And so if you earn $40,000 with your job, you ended up with $32,000. But if you invested and made $40,000, you pay no taxes and you got all $40,000 of that. So I really want you to understand that investing, just like owning a business, is long term. Trading, yes, you can day trade, and I don't have any negative things to say about day trading, but it's not going to help you tax wise. But if you keep a stock for longer than a year, which is what you really should do, most people love just trading and getting rid of and giving up. Oh, it's not going up fast enough, I'm selling it. No, just stay in it and let it go up, and then you don't have any tax deductions. And again, most businesses over time will make money. So if you're investing in the stock market and you can hold it for a year, you're actually doing yourself and that business a favor by letting it just grow. Okay, number 5, real estate. Now, this is the thing, baby, that I have been waiting for. So hopefully you stayed to the end and you are here with me, because this is the way. This is the way where you will not be paying any taxes. This is what I do. I absolutely love real estate. It is the number one way to millionaire. More than 89% of all millionaires have been created through real estate. That was true 100 years ago and is true to this day. And one of the amazing things about real estate is all of the write-offs that are available. And that's so many millionaires are real estate investors. Let me explain. Say you have a property that you bought for $100,000, okay? Well, it's going to be going up in value because that's what real estate does. But there's an amazing thing in the in the IRS code, in the tax code, that gives you this deduction for depreciation for like 27 years on each property. Okay. So you actually can, in many cases, you have made money on your real estate. So let's just give the full example. You have a $100,000 house. Okay. Let's just say you have a $100,000 house. You rented it out and you made, let's just say you made $1,000 per month. Okay. Let's just use that as an example. Okay. You have $100,000 house. All right. You rent it out and you made, let's just say you rent it out for like $2,000 per month. So let's just say you made $1,000 per month, and that comes out to $12,000 profit per year. Okay. Just using round numbers. All right. So $100,000 house, you charge $2,000 for rent. Your mortgage is $1,000, just using round numbers. So you made $12,000 in profit on that property per year. Okay. For 1 year. Now, what you would then do, of course, is you would start writing things off. Every single thing you spent on that home is a write-off. So the mortgage interest is a write-off, the insurance, the paint, the flooring, when you had a maintenance person go over there, when you changed the filters, when someone checked the plumbing, when someone went and inspected the fire, detectors and different things like that. Every single thing you do, you are going to write off. So let's just say you wrote off all of these things, all right? And and you actually found that you only made, let's just say this was $9,000 worth of expenses. Let's just use some round numbers, okay? You had $9,000 worth of expenses. So in essence, you had $3,000 worth of profit, okay? And that is what you would want to have to pay taxes on, okay? So you write off all the expenses. You think of every single thing. You driving over to the property, all of these things. You thought of every single thing. And again, get a tax professional because they are smart. They will think of things you could not even imagine, okay, to write off, all right? You get a good tax pro. And again, I have a link in the description box if you need one, all right? So say your profit was $3,000 per month. Well, you'd have to pay taxes on that. Well, no. In the IRS tax code, there is a thing called depreciation. So it would end up actually being more than, it would be like $3,600. Okay, let's just use round numbers here. It would be like $3,600. So you would actually be able to say you had a loss of $600. Okay, with the depreciation. Again, you can do this every single year because the property has wear and tear. It's being used. But the truth of the matter is real estate doesn't depreciate. Not in the true sense of the word. It is not going down in value over time. That's what depreciation means. It is actually appreciating. It is going up in value over time. Almost all real estate, statistically speaking, is going up in value over time, especially if you maintain the property, which in this case, while you're writing everything off, is because you are maintaining the property. And so a property that you bought 2-3 years ago, if you paid $100,000 for it, it's probably worth $150,000 or $200,000 between 2 and 5 years. And we say keep the property for at least 2 years because that reduces the capital gains tax, okay? Especially with a primary residence. I'll get into that in just a second. But let's just talk just investment properties, okay? This is just your investment property. This is an example of you just having one rental property, one investment property. You would actually show a loss, okay, in this situation where you actually made money, but tax-wise, it would be a loss. And you would get to do this over and over and over again with every single one of your properties. And this is why it becomes such a great write-off. Additionally, say that property now has gone from $100,000 to $200,000. Like I said, you hold it for 2-3 years. You have that tenant in there. You know, you do a year lease, then the next year you do another lease. Well, after 2 years will go by really quickly. And now you could sell it if you want it for a profit. Well, instead of selling it and getting that $100,000 out, and again, just using round numbers, you paid it for $100,000. 3 years later, it's worth $200,000. It's gone up in value. The tenant also has paid down that mortgage because every time they paid the rent, you've paid that mortgage down. Awesome, right? And in the meantime, you were writing off all of the taxes, all of the expenses, doing the depreciation, getting all of these amazing tax benefits. But instead of selling it, you would do a cash out refinance. That's what Robert Kiyosaki would do, Rich Dad, Poor Dad. He would pull that $100,000 out and he would reinvest it in more real estate, and he would use some of that cash tax-free to pay for his bills, pay his mortgage, pay his car note, pay for his dinners, pay his personal expenses. That's the same thing that you can do. And that's the same thing that Noelle Randall does now. So don't just sell your assets, leverage them is what I mentioned earlier. And also have real estate. It really is an amazing tax deduction, an amazing way to not pay taxes legally because there's just so much that you could write off. And also have a business. So if I'm recapping what I've said today, one is going to be have a business. All right. You're having a business is going to be amazing. It's going to create deductions for you. Secondly, you're going to maximize your deductions, okay? You're going to get a tax professional. Then you're going to invest money. So as you're earning money, you are investing it. And you're going to keep those investments long term. In other words, more than a year. Then you're going to get real estate and keep that more than 2 years, okay? And that way now you're not paying any taxes whatsoever. You're able to legally pay no taxes at all. Well, let me actually keep going with the real estate because there's one more thing. Like I said, property goes up in value, it's actually appreciating, but the tax code lets you act like it's depreciating. That's awesome. Well, you could also pull cash out of it tax-free, and that's leveraging your assets. Now, I would be irresponsible if I didn't tell you, you have to get better at managing your debts. As I mentioned earlier, one of the things that I don't like is when rich people are very insulting to people that are not rich and act as if poor people are poor by their own choice. And a lot of times it's just lack of education, lack of knowledge. You just don't know what you don't know. And if no one's here to tell you, you'll never find out. My parents couldn't teach me this. It was other, rich white men that taught me a lot of this stuff. And I'm able to teach that to you. And I'm able to help my community in unbelievable ways with the knowledge that I now have. And I want you to be doing the same thing because owning real estate actually gives you a lot of power too, a lot of power in your community. As a real estate owner, you actually get invited to different things. You actually have, you're a stakeholder. But if you rent in a community, you're not really going to get the ear of any politician, first of all. So You want to buy more rental properties. You don't want to just have one rental property. You want multiple rental properties. And an easy way to do this in the tax code is a 1031 exchange. Some of you guys have heard this 1031 exchange, where if you have use the example I have, you have this investment property, it's worth $200,000, you owe $100,000. Well, you can do a 1031 exchange where you find a similar rental property and move that money into that new rental property, and then you don't have to pay any taxes on the capital gains, okay, on that $100,000 because you bought similar rental property. In many cases, though, you don't even have to do a 1031 exchange to take advantage of some of these. So it's really 1031 exchanges actually have become kind of expensive because you have to pay for a qualified intermediary, that middle person. While once you sell that one property, the money has to go to like an escrow account before it can go to your new property that you're looking to find, and you only have a certain amount of time to buy that new property and move that money, and there's fees associated with it. So this is not typically done with just one rental property nowadays. Okay, maybe back in the day it was, but like in 2025, it's mostly reserved for hotels and apartment buildings because of the fees doing a 1031 exchange. Usually you can actually just wait the 2 to 5 years, like I'm saying, just wait 2 years, then sell your investment property and reinvest it yourself pretty quickly, or instead get the line of credit if you want to against your investment property and then buy more rental property. So there's so many ways to avoid paying taxes and not just selling your assets off, them giving you a lump sum of cash and then you having this big tax bill. So as I have mentioned, real estate is the #1 way to wealth, and I want to make sure that you learn this. I need you to know that readers are leaders, and you can get all 4 of my books for free. You just cover the shipping. Real Estate Millionaire Secrets has all of the secrets that I named today and way, way more. Additionally, this book, Business Millionaire Secrets, will teach you how to get business credit and business funding and leverage that to buy assets and not have to pay taxes. You can get all 4 of my books absolutely free. You just cover the shipping by going to noellesbookoffer.com. Go there today, get these 4 books. They will teach you how to make money, how to get to millionaire status, and how to avoid paying taxes legally now and until the infinity, okay? Like, this is not something that constantly changes. The tax system is designed for businesses. So you don't have to think that these deductions are going away anytime soon. They absolutely are not. And you can actually earn way more money and not have to pay taxes on that money if you do things properly. And these 4 books on entrepreneur, funding, real estate, they will teach you that. You can get them for free at noellesbookoffer.com. Go there right now. Supplies are limited and we will ship these out immediately. Again, that's Noelle, Noelle with an S, Noelle's book, BOOK, offer, OFFER.com, noellesbookoffer.com. Get these 4 books, get them right now. They will teach you. Leaders are readers, and you can get yourself to the top. I just want to make sure that you have all of the knowledge, all of the resources, and all of the tools that you need to be successful. This is Noelle. To your success.